Let me just, again, make sure it's...
Welcome to another Leumi Corner. With us once again, Michael Zaremski, head of U.S. Private Banking, Bank Leumi USA, member of Investment Committee for Leumi Investment Services. Good to have you back, Michael. How you doing?
Doing well, Zev. Good to be back, and hope everything is well with you and your family.
And thank you. Thank you. So I know a lot to talk about today. Michael, I was listening to a financial analyst who says that all the talk about depression, recession is really wrong. And I was thinking of you when he was saying that. He says because that was a economic situation. Here we're dealing with a voluntary situation to stop the economy, to pause it for a while. So it's going to be good to get it back. It's going to be just as strong, maybe even stronger when things start humming. And you've been saying that for weeks on this broadcast that, you know, this is something which is just temporary. It's not like the 2008 situation. And I heard one of the analysts say exactly what you said. It makes a lot of sense because we see that the stock market is up, economic indicators are up. We're not fully open yet.
Zev, I think that's a great point, and I hope more and more people come over to my point of view. And again, just before I answer your question, just to reflect again, these views that I'll represent are my own, not necessarily those of the bank. But I very much agree with the comments that you've highlighted. And I think in large part what I've started to hear more and more about is when the discussion is what is the shape of the recovery. I think a lot more of it we're starting to hear people shy away from thinking about things in the classic recession recovery and think about it more in terms of like the natural disaster model. So if we think back to Hurricane Sandy or we think back to Katrina or other types of natural disasters of that nature, again, there tends to be a very deep, sharp break in economic activity. And once the natural disaster is handled and dealt with, the snapback generally comes rather quickly. But I would also like to caution is I think one of the things that we're seeing here is that there's a big disparity in terms of how things are opening, how that happens by region, where are the parts of the market that are impacted more than others. So I think, as I've highlighted before, we're talking about a tale of two recoveries, but in many cases it's a tale of a bifurcated recovery.
Because I'm not even sure, like Hurricane Sandy and Katrina, where you had actually devastation on the ground, you had to rebuild. Here, we put it on pause. So I would say it puts us even in a stronger position than even a hurricane or a natural disaster.
I certainly would buy that argument, but I think that the concept of it is the rapid forced stop and then the restart. And when you look at the country as a whole right now, there's 21 states right now that are mostly reopened. I think if you went back 3 months ago and said what would be the pace of reopening, I would largely guess that we're ahead of that pace. Additionally, when we look at data that represents the 50 states plus Washington, D.C. and Puerto Rico, 25 of the 52 territories have a 14-day downward trajectory in new cases. So that's almost half of the regions being looked at, or states or regions being looked at. And of those 52, 46 of them have a negative 14-day trajectory in positive test cases. So that's incredibly positive news. And 23 of those 52 states, so to speak, have under 200 new cases as of yesterday. So I think the data in general is becoming a lot more positive. And I think what we're starting to see is the way things are opening up. So again, very encouraging for those sports fans out there. Bundesliga soccer started out last weekend. Again, empty stadiums, but some live action. For a lot of the viewers or listeners of your show, the Israeli Soccer League is supposed to open up, I believe, this weekend. English soccer is supposed to open up, and very encouraging stories in terms of what we're expecting for the summer in terms of the NHL, the NBA, and Major League Baseball here. All these things will generate significant economic activity, even if the stands are empty, but at least things will be happening. Consumer confidence is starting to step up. And in general, I think what we're going to be debating going forward is how much of what we're seeing, and again, as you talked about your models, how much of it is pent-up or delayed demand versus demand destruction. And demand destruction is basically saying that something that happened won't happen again. So if we completely canceled an NBA season, that would be demand destruction. But if the NBA season gets delayed, it's pent-up demand, delayed demand, and will recoup at least a significant portion of that economic activity. And when you think about the way the government has handled it, the government has thrown an unbelievable amount of money at the problem. For a lot of your folks out there, listeners out there that are business owners, essentially the government has given out a bridge loan. And that bridge loan in terms of fiscal stimulus is about $2.4 trillion. That's tax breaks, rebate checks, the PPP program, unemployment, state and local government assistance. And in addition to that, the central bank, in terms of monetary policy, has given right now up to about $6 trillion, and a number that keeps rising in terms of bridge loan, if you will. So again, a 150 basis point in rate cut, which we saw in March, the massive amount of quantitative easing, and a lot of balance sheet purchases, which are designed to create liquidity in the market. So the real question is going to be, is this massive stimulus, which again at this point, we're going to be measuring it in double-digit trillion, so somewhere over $10 trillion, is that going to be enough money to make up for the demand destruction that we're going to see in this period of time of economic destruction from the pandemic? What I would say from a very positive standpoint, when you look at a lot of the data, April seems to be the trough in a lot of the data. We look at the jobless claims. The high point seems to be the last couple of weeks of April, where we had about 7 million people filing for unemployment. While the numbers now are still growing, it's growing at about a rate of about 2 million per week. We'll see where the numbers continue to go from here. But the peak seems to be behind us in that regard. Similar to the peak in the COVID cases, it seems to be behind us in terms of that massive surge. We are also starting to see areas of strength coming back, which, frankly, surprising to me. If you look at some of the numbers for the travel and the hospitality industry, people are actually booking cruises again. People are actually booking airfare and travel destinations. Again, the rates aren't fantastic, and the rates are going to be a lot lower than they were year over year. But the fact that they're seeing the amount of demand already for second half of this year is incredibly encouraging to me. And I think I've said this before, but I think so much of the issue that we deal with here in the New York area is we still continue to have a mindset that every place in the country is dealing with this issue in the same manner that we are here in our locality in New York and New Jersey. So again, I think that's really part of this bifurcation in terms of how the recovery is happening in multiple stages in multiple places across the country and across the different regions.
Encouraging, and thank you for sharing that with us. Michael Zaremski is head of U.S. Private Banking, Bank Leumi USA, member of Investment Committee for Leumi Investment Services. Michael, thank you.
Thank you very much, Zev, and look forward to talking to you again soon.
And we're going to be right back. Don't go away. Stay tuned.